Risk germinates from envy, spreads from greed, and ultimately leads investments down a path of no return. Hello everyone. Today I'd like to share with you some of Mr. Adam Sharpe's investment philosophy. He teaches us not to indulge human nature in investing, nor to blindly fight it, not to assume we can control the market, nor to believe we can completely overcome human weaknesses. This is a set of fundamental investment principles worthy of serious consideration and learning for every ordinary investor. They allow us to enjoy the thrill of trading while remaining calm in the face of the ups and downs of the capital market. Let's get started. In the seemingly cold and rational world of investing, we discuss financial reports, valuations, and Federal Reserve policy every day. We use complex models and reams of data to try to predict the next inflection point on that mysterious price curve. But today we're going to discuss something that none of these data and models can capture, something that fundamentally determines whether we ultimately return with a bang or exit with disappointment. Ourselves, those innate, ancient, and powerful emotions deep within us, greed and fear. If you could sit down for coffee with any investment guru who ultimately survived the market and built their own empire, you'd find they invariably bear a scar. It's the memory of a crushing loss, a moment of despair that nearly drove them to give up. It was this indelible scar that ultimately shaped their investment philosophy and gave them a true understanding of awe. Today, I'd like to share my scar, as well as another, even more heartbreaking story I've heard. I'm not sharing this to elicit sympathy or to boast, but because I firmly believe that these two, almost brutally true, stories contain core disciplines that every ordinary investor should inculcate from the outset. The story begins in 2004. That year, I was 24 years old and had just passed the rigorous exams to obtain my stockbroker and financial advisor licenses. Imagine a 24-year-old holding 2 gilded certificates, feeling like he'd mastered all the secrets of Wall Street. At the time, 4 years had passed since the devastating dot-com bubble burst of 2000. For us newcomers, it felt more like a distant textbook story than a personal lesson. The market was recovering from the ashes, and an air of optimism permeated the air, seemingly brimming with opportunity. My second trade was with a then robust tech company called Research in Motion, stock ticker RIM. The name might sound unfamiliar, but its product was a legend, a symbol of its time: the BlackBerry. Before the iPhone, the BlackBerry was the go-to communication device for business elites and politicians alike. I remember it vividly. That trade netted me $1,400 in a very short period of time. For a young entrepreneur just starting out, it was a windfall. My first reaction was to blurt out, "Wow, that's too easy." Looking back now, that easy success was probably the worst and most dangerous thing that ever happened to me in my entire investing career. It sent me a fatal false signal, creating a terrifying illusion. I thought my ability to make money was due to my exceptional talent, a once-in-a-generation genius. I completely failed to realize that it might simply be luck, a product of a fortunate opportunity. So, I began to become bold, even downright arrogant. I became obsessed with a tool that Buffett calls a weapon of financial destruction: leverage. Let me explain leverage with a simple analogy. It's like your broker lending you money to invest in stocks. Suppose you have $10,000 in capital. With 3x leverage, you can trade $30,000 in stocks. If the stock price rises by 10%, you'll make $3,000. A staggering 30% return on your $10,000 investment. Your greed has been perfectly satisfied. On the other hand, if the stock unfortunately dropped 33%, your loss would be $10,000. Your entire investment would be wiped out in an instant, a phenomenon we often call a margin call. At that time, I was like a gambler who had won several consecutive rounds at the casino, completely carried away, and began to increase my bets frantically. I used at least 30% of my account funds on each trade, and sometimes, when I was extremely confident, I would even use more than 100%. Like a headless chicken, I tried every trading strategy that sounded cool. Short-term trading, day trading, momentum tracking. I no longer cared about a company's fundamentals or its value. I was addicted to the thrill of watching the numbers on the screen quickly jump. I was obsessed with trading itself, not investing. The outcome was unpredictable, like that of any gambler who abuses leverage. after a series of foolish and impulsive decisions, my trading account balance slowly but steadily moved towards that cold number that all traders dread, 0. That was the first, and to this day, only time I completely wiped out an account. I still remember that feeling vividly. It was more than just a loss of money. It was a devastating blow to my self-esteem, confidence, and intelligence. You think you're a genius, but the market brutally reveals you're nothing but a fool. Fortunately, I was still young, and the money I lost back then doesn't seem unbearable now. That bankruptcy was the first and most important tuition I paid on my investment journey. It taught me a painful yet profound lesson. In the face of absolute risk, any fleeting display of genius is merely a flash in the pan. From that day on, I never used margin trading again. I began to force myself to invest the majority of my funds in investments that I understood and was willing to hold for the long term. My story is actually quite common in the world of traders. It can even be considered a necessary rite of passage. But sometimes, the market tells a far more cruel and tragic story. In these stories, you can even predict the future with 100% accuracy and still lose everything. Next, I'm going to recount the true story of a user named Dubiously Curious on the famous Wall Street Bets forum on Reddit, often known as the Wall Street Casino. This may be the most extreme and heartbreaking warning about leverage I've ever heard. The story took place in 2018. This man made what seemed at the time to be a truly remarkable judgment. He had a profound insight that NVIDIA would become more than just a company that makes gaming graphics cards. It would become the core engine of the coming artificial intelligence revolution. At a time when the concept of AI was far less hype than it is today, he saw the future earlier and more clearly than most Wall Street analysts. He was a true visionary, a prophet who saw the future. So, he made an equally grand decision. He invested his entire fortune, approximately £100,000, in NVIDIA stock. But like me at 24 at the time, he felt this wasn't fast enough. He wanted to accelerate his dream. So, he used 3x leverage. For a while, everything went smoothly, like the script of a self-proclaimed film. NVIDIA's stock price rose steadily, and his account accrued substantial profits. He wrote a hopeful message in his post. For the first time in my life, I see a path to financial security. You can sense his excitement, joy, and beautiful vision for his future life from these words. However, in 2020, fate shifted in a direction no one could have predicted. The COVID-19 pandemic, a textbook black swan, swept the world, triggering circuit breakers and an epic plunge in financial markets. Remember the 3x leverage we mentioned earlier? This meant that if the stock price fell by 33%, the account would be forcibly liquidated, and everything would be wiped out. NVIDIA, as part of the market, was naturally not immune, and its stock price plummeted sharply along with the broader market in a short period of time. Dubiously Curious later posted a chart on the forum, one that left all his viewers heartbroken and breathless. The chart featured two different colored lines. The blue line represented what would have happened if he had simply held onto NVIDIA stock without using leverage. We can see that this line experienced a deep V-shaped dip in 2020, but then, like a rocket, it soared to the moon. His initial investment of £100,000, if he had simply held onto it until now, would have grown to over £2 million, a fortune sufficient to achieve financial freedom. The red line represented his actual position, using 3x leverage. Initially, this line outperformed the blue line, appearing steeper. But in the 2020 COVID-19 crater, it failed to climb out. Instead, like a kite with a broken string, it plummeted to 0. On the chart, a grim, vertical dotted line marked that moment, with the words "position sold" written next to it. At that moment, the NVIDIA investment game was completely over, a sudden death before dawn. His original words in the post were a mixed bag. I had to sell my meager remaining assets just to buy food. The most ironic thing was that as soon as I sold them, the stock price rebounded dramatically. But by then, the damage was done, and nothing could be undone. He had completely grasped the company's prospects and the advent of the AI era. But his abuse of leverage deprived him of the right to stay at the table and witness the final victory. He was like an astronaut who knew a future flight would reach the moon, but was despairingly ejected just before the rocket ignited and took off because of a minor, avoidable mechanical failure. My story is about greed. His story is about how dreams are shattered by the fragility of reality. Both stories point to a common enemy, a world rife with uncertainty, beyond our control, and ourselves equally rife with human frailties. So, after personally experiencing and witnessing such devastating failures, how do we rise again? How can we build an investment strategy capable of withstanding both external black swan events and our own inner demons? We'll discuss the answer to this question in the next episode.